Moving on to our second entry type, we have here on the screen the confirmation entry, right? This is maybe, or it is actually my favorite entry type because it gives me an additional or additional information, additional confirmation for me to enter into a trade, boosting my confidence and increasing the likelihood of my trade to play out in a positive manner. Okay, so first in the confirmation entry type, right, we want to identify a point of interest using the higher time frame, just like we did in the risk entry, right? However, rather than refining to a lower time frames to pinpoint an entry, we simply wait for price to tap into this higher time frame order block, right? So when price taps into the point of interest, we want to scale down to a lower time frame execution time frame, right? And wait for a break of structure in favor of the point of interest. So if currently price is moving back up, right, we clearly have on the lower time frame bullish structure, right? Before we want price to push lower, we will see lower time frame shifting in market structure, giving us that confirmation entry that we're looking for, right? So once we see a break of structure in favor of the higher time frame point of interest, we would enter based on the newly created fractal lower time frame order block, right? So on the yellow dotted line, right, it's the lower time frame price action, whereas the white one is the higher time frame. So we can see that with this impulse to the downside, breaking these structure lows, right, we would have created a lower time frame order block, right? So rather than entering on a higher time frame order block, we're looking at a newly created fractal point of interest on the lower time frame where our entry would be based on the proximal point or the equilibrium, right? And our stop loss above with a buffer of the lower time frame or the newly created order block, right? So it allows you to really have a smaller stop loss size, ultimately increasing your risk to reward on your trade setup with additional information, right? Now, the confirmation entry type is best used when the range between the higher time frame point of interest and lower time frame refinement is large, right? So in the case of a, let's draw this out. In case of a higher time frame structure, point of interest, excuse me, let's say we would have had a refined 15 order block like this, right? There's a huge distance between the lower time frame refined order block and the higher time frame order block. So entering based on a risk entry down here and placing your stop loss above the refined lower time frame order block is somewhat risky, right? So what we can do instead is wait for price to tap into this point of interest and create that shift in market structure and enter based on that confirmation entry, right? To then, okay, say market structure is shifting, it is safe for XYZ reason to place the stop loss above the refined 15-minute order block or the newly created order block within the lower time frame fractal block. Okay, it is best used when price comes back to the point of interest, right, the higher time frame point of interest in strong momentum. So if price is coming back up to this point of interest, not in a corrective manner, however in a strong momentum manner, it is safer to use confirmation entry within this higher time frame order block to enter, right? This will allow you to prevent you from getting tagged into a trade on the risk entry perspective and tagged out shortly after, right? So if there's no shift in market structure on the lower time frames or a break of structure in favor of that point of interest, there is no entry, right? So there's no trades being taken. Hence, you'd be taking no losses. Also, it is best used when taking a counter trend trade, right? So in this case, we can clearly see, current momentum is to the downside. However, if the higher time frame market structure, right, on the daily 4 hour and whatever the 1 hour and all of this is on the lower time frame, and it's pointing up, this would be a counter trend trade where you'd be trading these little retracements, right? It's much better to trade on a risk entry perspective, or even a confirmation entry perspective, to trade with the trend, because we know the impulsive moves, right, the extensions are much greater, much bigger moves than the actual retracement, right? So this could filter out, you know, bad counter trend trades to be taken on a risk entry perspective and waiting for additional confirmation, right? And of course, it is also best used when there are multiple points of interest on the higher time frame to consider. So again, if let's say your order block was quite large on the higher time frame, we could potentially have an order block on the lower time frame over here and another one down there. So instead of taking, you know, risk entry on both, right, we can potentially filter out an entry on any one of them. So if price, right, doesn't shift in market structure here, but only at the second one, right, we can enter based on the top, right, the second order block rather than the first one within that higher time frame order block. Okay. Now, in regards to the pros and cons, confirmation entries provide additional confirmation prior to taking an entry, since the lower time frame will be providing or pointing at the same direction as the higher time frame structure, right? It also provides an increased risk to reward as the point of interest is refined and executed using the lower time frame. So these things, right, those benefits of the confirmation, I've mentioned them at the beginning of this lesson. However, I'm just confirming them for you, right? We can see them in this illustration over here, right? And of course, for the cons, we may miss trades if price does not mitigate the newly created fractal order block on the lower time frame, right? So there's always chance for price to break this point of structure here, creating this newly created fractal order block. However, price could retrace and just continue lower, not completely mitigating this order block over here, allowing us to enter the trade. So there's an increased likelihood of you to miss a trade, right? It also requires more chart time, as you need to monitor price on lower time frame for entry, right? So as price starts to approach this higher time frame order block, right, you might have some sort of alert up here, right? And once price taps or alerts you that price is approaching this higher time frame order block, we then want to monitor the lower time frame price action, right? Because we're looking for price action pointing in the same direction as this downward impulse, right? So it will require you to be on your computer or on your phone a lot more than the risk entry type, where it's more of like a set and forget type of entry method. And of course, you may get false signals before the market shifts in the intended direction. So we can have a case where price gives us this break of structure to the downside. However, this could easily just be a draw on liquidity, right, below these equal lows for price to push higher, right? And this is more often seen when you're taking a counter trend trade, right? You have an increased likelihood of being trapped in, you know, liquidity moves, right? Now let's go take a look at a candlestick chart example of a confirmation entry. Let's take this GBP USD example of a confirmation entry. Okay, so we can clearly see that the momentum or structure, right, is to the upside, right? So we can clearly see price moving to the upside, and by considering taking sells from this order block that was created from this impulse to the downside is a counter trend trade, right? So this is what would the risk entry be, right? It's a riskier trade based on the information that we have, and of course our risk to reward isn't super, right? We're getting about a 2.45 times our risk type of setup. However, let's zoom into the 15-minute time frame to see, or the 5-minute for that sake, on our execution time frame to see how we can use the confirmation entry to increase the likelihood of being in a first positive trade outcome, right? And of course, ultimately increase the risk to reward on the setup. Okay, so let's use the bar replay to filter out all this information and go down to the 5-minute time frame, okay, and zoom in to price when it tapped into this higher time frame order block, right? So now let's just delete this. Just remember that this was a 24 pip stop loss with a 59 pip reward for a 2.45 risk to reward, right? I believe I already have the drawings preset over here. It's not this one, right over here. Okay, so we can clearly see that as price tapped into this higher time frame order block, right, we have this type of structure. Okay, so we have the low, right, a sequence of higher highs and higher lows. We could potentially just filter all these out and see this in this way. So this low, this high here, a new low, and a new high. However, we can see that there was actual structure here that broke this high here to create a new low and a new high, right? Then we get equal highs being created, and then momentum, right, pushing to the downside, breaking this minor point of structure and this actual low or higher low on the 5-minute time frame. So now we have our lower time frames after this impulse to the downside pointing in favor of the higher time frame order block. So what do we look at doing? Same thing that we would normally do on a risk entry perspective. However, we're going to do it on the lower time frame, right, the execution time frame. Hence why we can see here this 5-minute order block created based on this one bullish candle before the sells, right? We can clearly see that we also have some price inefficiency here and over here for price to come back, gravitate to, right, mitigate, and then push lower, right? So we went from a 2.45 risk to reward setup to about a 6.49 times risk to reward on a confirmation entry perspective. Okay, so this just shows you how in case of like a counter trend trade where you're not comfortable taking a risk entry where price could simply just tag you in and move further up and tag you out and take a loss, right? It's not ideal. You're aware of the market structure, you're aware of the momentum, right? So you want to be on the safer side, right? You'd rather be safer than sorry, and this would only require you to be more patient and of course a lot more chart time, right? So if you had, for example, an alert, once you got alerted here, it would have taken about an additional 2 hours and 10 minutes before you enter the trade from the risk entry perspective to the confirmation entry perspective, right? Now, I'm not expecting you to spend a whole 2 hours just looking at every single candle being created. However, right, it would require you to identify somewhat this consolidation area and especially this breakout to the downside. So once you get this breakout here, right, breaking this point of structure and this one here, okay, all it would have required on that 5-minute time frame was at this point here, we set our sell limit at this 5-minute order block, stop loss 2 pips above the 5-minute order block, which was about the highs of the of this price point. Okay, and this would have taken about, where are we? So from the point that we got our confirmation for a confirmation entry and the point where our trade would have been triggered, it would have taken 30 minutes, right? So just 30 minutes, and then we would have been tagged into the trade, and shortly after, making 6.5% from a 1% risk, right? Price push slightly lower, we know this, okay? So ideally, right, if we understand where liquidity lies in the markets and knowing that price aims for that liquidity, okay, our targets would have been around these lows or slightly lower, right? And we can clearly see ultimately this would have presented a 7.32 times risk to reward. Okay, so this just shows the benefit of using a counter trend trade in such market environments.